Minorum Gold YouTube channel here regarding you were doing several interviews on the mining sector, as well as several issues, especially the China and Singapore story and their insatiable demand for gold. We're here talking about the Asian gold myth as a continuation of our series from the PDAC with Jayant Bhandari. This is part 2. Very proud to have on the line Mr. Bhagyesh Dash, who's with Bromius Capital, which is an investment and advisory group based in Singapore, specializing in the mining and metals and upstream oil and gas sectors, and as well Jayant Bhandari, an Asian institutional advisor and private investor. Thank you both for being here.
Thanks for having us here, Sunny.
Thank you very much. Thanks, Sunny. Appreciate it.
What I wanted to talk about was, the China and Singapore story. We definitely hear a lot about it on the news and in articles, but I want to hear from you both who are down on the ground to talk about the demand for gold. But before we get into that, there's been some significant news over the last couple of weeks here, with especially the Indian election. The Indian National Congress, after 18 years of rule, has finally lost. Narendra Modi of the BJP party has now been elected for Prime Minister. And I guess I'll start with Bhagyesh. I mean, you were just there a week ago in India. What was the sentiment?
Thanks, Sunny. I was actually specifically in eastern India, so in Kolkata and Odisha, which is one of the poorest states in India. And I would say the sentiment was optimism and hopefulness. It was pretty clear by then that the Congress Party would lose. I think people have been surprised by the degree to which they have been defeated, because this is, I think, the worst result by far. But people were generally optimistic. There was some concern as to how Mr. Modi would go about, governing a country such as a diverse country such as India with, different fragments to it. But generally, the mood is very optimistic and very hopeful that things couldn't get worse, and if anything, would only get better.
So you think this, in your opinion, do you think this is a positive for the country going forward then?
Look, I think, I have to agree with the sentiment that things could not get worse. It's quite remarkable that a country of 1.3 billion people and one of its leading parties focuses on one family to try and lead it. It staggers me beyond belief that we cannot get a few more leaders. So it's very good to get a new, fresh face. I'm not focusing on whether it's Modi or someone else. Just to get a fresh face, someone who's come from an underprivileged background relatively, and someone who doesn't carry the Gandhi name. I think it's positive for the country. It demonstrates and hopefully inspires other people in the country that they can also do it. So from that sense, it is positive. Now, he's got a very strong mandate, which has surprised most people, because, the BJP on its own can form a government and doesn't have to rely so much on partners. So he, let's see if he can capitalize on that mandate and actually, push through policies and reforms that are critical and essential for the country.
Mm-hmm. And Jayant, I mean, what was your feedback on this? I mean, we just spoke about a couple of weeks ago, and you were there recently as well. What's your reaction to this?
Well, I was in India two weeks back, and I was there for about a month. And I was in India to actually understand what was happening in the elections. Yes, I totally agree with Bhagyesh. There was a lot of euphoria about the new government, about the elections, the possibility of Narendra Modi becoming the next Prime Minister. But I have a slightly different assessment of the situation. I think the euphoria is mostly a result of the fact that Indians are still expecting the next government to be the magic wand that can change that country. And what India really needs is a bit of self-reflection, individuals to wake up and start understanding that they themselves can make a country. It is not the government which makes or breaks the country. And also, I think a lot of people are very happy that the next government is likely to be a strong government. In my view, India has done best when the government was weak. So I'm not very optimistic going forward for India, because I think this will be probably a religiously fanatical government and a strong government, which will have a divisive implications on the society, because Modi was someone who was heading the province of Gujarat when a massacre of Muslims took place in about 12 years back. So looking at the past, I'm not very optimistic about what's happening in politics in India right now.
But how about his, what he did for the state of Gujarat? What with it being a very flourishing state, is that due to him, or is that just due to Gujarat just being, with the geological location?
I think Gujarat is a very entrepreneurial place anyway, and I think Gujarat would have done well without Modi, and in my view, it might have done even better without Modi, because Gujarat lost a couple of years when the problems between Hindus and Muslims happened in the year 2002. So I think Modi has done a fabulous job of packaging himself and marketing himself very well in India and outside India. And he looks like a hero figure. I don't think he's a hero figure personally. He's a religious fanatic. He has a company of religious fanatics around him.
Look, I would just say that I think I absolutely hear what Jayant has said on in relation to Modi as well as prospects for India, and I agree that if you're expecting a magic wand, that would be wishful thinking. We've seen this in the recent past, particularly in elections in South America and Peru as well as in Brazil, where someone like Lula Silva came into power, and the way in which he conducted himself in power and the policies he implemented were quite different to the reputation he came into office with. And I think Modi's invitation to the Pakistan Prime Minister is a slight reflection of that as well, in that he will be forced to try and act more statesmanlike. Now the question is whether that is going to be just for show, or is it going to be backed up by substance? But he is now taking over the largest democracy in the world, one of the biggest countries in the world, and it will be interesting to see how he conducts himself. And I think this is it's a statesman-like step he's taken, and the question is whether he followed through with that. And the examples we've had are with the people who took power in Brazil, Lula Silva, as well as when the Peruvian president came into power. Again, he came in on the back of more nationalistic fervor, but it hasn't turned out that way.
What does this mean for gold demand in India, especially with the tariffs? What's the reaction of the Indian Bullion Jewelers Association? Jayant, would you care to comment on that?
Well, so Sunny, the premium on gold, and when I say premium, I include the import tax as well, because a lot of gold coming into India is not through official channels anymore. Most of the gold, from what I know, is coming via smuggling. So the premium on gold in India was about 24% 2 weeks back. Today, it's only about 14%. So in rupee terms, gold price has fallen by about 10%. Also, Indian rupee has improved in value by 2 or 3% in the last 2 weeks. So a combination of this has been an improvement, which is a fall in the price of premium and a fall in the price of gold in Indian rupee term. So market is clearly expecting that Modi's government will bring down restriction on gold imports. So that's a very positive thing for gold. And this is backed by the fact that gold traders are people who have traditionally supported BJP in the past, and they are the people who are behind BJP. So BJP will likely return the favor by removing or reducing import tariffs on gold imports.
Very interesting. I guess we'll see in the next coming months with the numbers that come out, or whatever actions that the BJP party does implement. I mean, we'll see. Hopefully that'll be a good positive for that. Let's move on to what we wanted to talk about was the China and Singapore story of gold. So, Jayant, I mean, you travel to Singapore, you reside there as well, and so does Bhagyesh with his firm there. So let's just talk about what is Singapore, the culture, the population, just in general terms.
Well, Sunny, I have been in Singapore only for a couple of years, so Bhagyesh is probably the best person to comment on this. But my impressions over the last 2.5 years have been very positive about the country. The bureaucracy is very limited. It's a very easygoing country. I find my interactions with the government are for a very short time, and things happen very quickly in that country. The airport is one of the friendliest airports I have ever been to anywhere. You don't have to go through the security until the time you are about to board the plane. Mm-hmm. So, and also the taxes are very low. Just the system works well. The work ethic, I think, is very, very high grade in that country. Mm-hmm. And I think, in a way, in my view, and again, this is a view of a person who has been there only for a very short time, I think the country is one of the most competitive places to work from.
Okay, so I guess I'll throw it back to Bhagyesh. I mean, what's your general feel of Singapore from being there and living there for most of your life? I mean, what is Singapore really, if someone were to look it up?
Firstly, I agree with most of what Jayant has said, but there's one point that I'll pick up on, which Jayant mentioned, is when he talks about taxes being low, and that is in itself correct, but it sometimes creates an artificial or the wrong impression that therefore the cost of living is cheap. And recently there was a survey done which was widely publicized, which ranked Singapore as the most expensive city in the world to live in. And the reason for that is that cost of living is taxes is just one component, and then you have to factor in housing, schooling, medical, and food, drinks, all of that. And when you factor that all in and put it in the basket, actually Singapore is a very expensive place to live, and the cost of living has risen, over the time that I've been here, which is the last 9 years. The cost of actually acquiring a simple car will cost you. We put you out of pocket by about $80,000 to $100,000, and that's before you buy the car. So, so you can appreciate living in Canada or North America, what that means. So when you factor all of those things in, Singapore is a very expensive place to live in. It is creating a fair amount of pressure on the local Singaporeans, not so much on the expats, although, mind you, I believe the expats, some of them are also hurting. Because the housing market has risen considerably over the last few years, and most of the local population, young population that have joined the workforce have been priced out. And in the last elections, actually, the ruling party garnered its lowest percentage of votes. I would like to say in its history, but I'm not 100% sure of that, but certainly lower than in the last two elections. And that's got them concerned because, what we need to do is we need to make this into a more inclusive society and make sure that the young don't lose out. And there is that groundswell of pressure that the ruling party is facing, and it was reflected in the next year's presidential elections, where the opposing party or the candidates not supported by the ruling party garnered more votes than was expected. So there is that element of social pressure that Singapore is facing. In other aspects, I 100% agree with Jayant. It's one of the few places in the world where you can literally land up and within a couple of days you will have your driving license, your telephone hooked up, your internet hooked up, your TV hooked up, and it's a plug-and-play society. Whereas in any other country, I think it would take you a month to literally settle down.
And this goes into the next question. I mean, if it's a very attractive place for someone to settle, but also for business as well. And what I've seen is that Singapore becoming a global trading hub for commodities. I mean, if you look at their website, even International Enterprise Singapore, which is the government or the government agency for Singapore's external economy to promote international trade and dedicate to making Singapore a precious metals trading hub. Jayant, can you speak on that?
Well, I mean, of course, recently they removed sales tax on gold in Singapore.
That's correct. Yes.
And that has made it possible, and that is, of course, to encourage trading of gold happening from Singapore.
Right.
And from what I know, a lot of trading has actually moved to Singapore as a result of it. A lot of people have started storing their gold in Singapore. There has been the free port storage of gold at the airport in Singapore for several years.
Right, quote unquote, the Fort Knox of Asia.
Well, yeah, I mean, apart from Hong Kong, yes.
Yes. So sorry, I interrupted there, but go ahead. Just as you were saying, they have the Singapore Freeport. I mean, the same company that set up the storage in Geneva as well. It's a very large facility, as you mentioned. 22. Just to mention a few things here. There's 22,000 square meters. Storage rooms. I mean, they have 24/7 armed guards. It's a very serious facility.
Yeah, and I have been to the facility. It's an amazing place. You go through scanners and security, and there are doors after doors, and these are very thick metal doors.
Mm-hmm.
So they have done a very good job of organizing the place for people to store not only their gold but their paintings and their cars and vintage expensive wines. So it's used for a lot of things other than gold.
Why would Singapore, or the government want to advocate that they want to become a trading hub for commodities?
I'll give a brief view, and Jayant will probably have a more detailed perspective on it. But I think it's very simple. Simply related to the fact that Singapore, first of all, if you go back many, many years, Singapore started off with having absolutely nothing to offer to anyone outside Singapore. And what it's done is it's added strings to its bow step by step. So a few years ago, they took the decision to bring casinos on board, build a theme park. They keep refurbishing different parts of Singapore. Every time a part of Singapore looks jaded, they will go in and refurbish it, reconstruct it, revive it, revitalize it. And I think, there is what Singapore wants to continue to do is not be a one-trick pony. So it wants to build a model which is based on a combination of tourism and commerce, and not fall into the trap that perhaps Dubai fell into a few years ago during the GFC. And this is simply a case of Singapore wanting to offer something to everyone. They want to keep developing the stock exchange. They are focused on developing a commodities exchange as well. And, they want to cater to everyone who has money.
Well, as I said, Bhagyesh has a much more sophisticated understanding of Singapore than what I have. And I think he clearly defines what Singapore stands for, that they want to develop that country as a multifaceted economy, and they encourage all kinds of businesses to set roots in that country.
Mm-hmm. And I'll just mention something brief. I mean, there's a company called Metalor Technologies, which is a refiner, which has set up a facility there. And, one of the reasons why they set up a facility is that usually the gold between Australia and China is quite indirect, and they want to make Singapore the central hub, so they can refine the gold right there and actually store it for those respective groups. So, what is the outlook for Singapore gold trading? Do you think it will keep growing with more banks, possibly setting up more storage facilities, or just in general more storage facilities? Will there be more expansion of services or competing gold exchanges? What do you see in the next several years?
Well, I personally think that both Singapore and Hong Kong, the way the governments are set up, they are less intrusive government, which gives people higher level of confidence in operating their storage facilities in that country, just because the government is less intrusive. But maybe Bhagyesh has something more to say on that.
No, actually, on this particular point, Jayant, I don't. And to be honest, Sunny, I don't particularly have a view apart from what I'm seeing generally in the financial sector in Singapore is that, again, since I've been here and particularly over the last few years, a number of family offices from Europe have moved to Singapore. A number of the European, the niche private banks have set up operations in Singapore. A number of the banks, the larger commercial banks, have set up their back office operations in Singapore, although on that point, the cost of living is creating some pressure. But Singapore has done a very good job in ensuring that it has tapped into Indonesian capital, which there is a lot of, Russian capital, Chinese capital, and Indian capital, and now increasingly European and even American capital. We have the high-profile case of, one of the early co-founders of Facebook, who has moved over to Singapore. We've got the world's richest woman, Gina Reinhardt, who is the iron ore lady from Western Australia. She has bought a couple of homes in Singapore. You've got a lot of high net worth rich individuals who've moved to Singapore. So the point being that, a lot of that is happening in the general financial sector. To what extent does it have relevance in terms of gold trading? I cannot give you a proper answer, but I can simply tell you that this is a trend where, a lot of high net worth capital from around the world has relocated to Singapore. Hong Kong tends to be a destination where a lot of high net worth Chinese capital moves to. But in terms of international capital, Singapore appears to be a favorite destination.
Interesting. And are there any other countries that you can think of or areas that can offer a compelling service just like what Singapore does?
Well, based on what I have seen, I think there is not. Singapore and Hong Kong also give you a very good advantage in the sense that they are close to the biggest developing markets in the world, and you don't have the same thing in Central America or places with outside Asia. So most of these two are very good centers based on the simple fact that they are close to the biggest developing markets in the world. But I wouldn't know of any other countries that give you the kind of framework to operate in the way Hong Kong and Singapore do.
And I'll just mention just a brief point here. Talking about the framework of businesses working there, especially as these vaults. When I mentioned Metalor Technologies, their goal actually was to refine 1 ton per week of 99.99 kilo bars to 2 tons per week, with the overall goal of 3 tons per week. And this whole facility actually is a huge facility to be completed by 2016. So you're seeing a lot of businesses, like you say, even private equity firms from Europe looking to mobilize there as a favorable place of business. So talking about particular private equity firms like you mentioned, European ones, Bhagyesh mentioned there. Let's talk about the Chinese private equity groups. Now, me and Jayant talked about that at the PDAC. Mentioned some very excellent points, but I also want to get your feedback. Are Chinese private equity groups, as well as SOEs, still, or state-owned enterprises, still looking for natural resource assets outside of China, in Africa, or North America? And what's the process?
Look, the short answer is yes, absolutely, and demonstrated by the recent deal to buy Glencore's Las Bambas asset, which a consortium did, of which Minmetals was the leader, and that's a $5 billion outlay off the top of my head, and plus they need to sink in another $2-3 billion to get that project into production. So the short answer is yes, and of course, recently we've seen that a company controlled by Zijin Mining, which is the second largest gold producer in China, made a bid for another gold project, or a gold company listed in Australia called Bula Bulling. Bula Bulling have rebuffed that deal, saying that the share price is too low, but there's another demonstration of interest from Chinese groups, and in particular SOEs. I think right now, I've got a few points to make on this.
Sure, please.
It is there's still a lot of capital there, mostly state capital and growing private capital, and I'll get to that later. What the Chinese have realized is that the market has come to them, asset prices have dropped, and therefore they can afford to play a waiting game. They're absolutely interested in the assets, but they're not going to pay over the top prices. And they're going to bottom fish. Now, whether they will be successful is a different question, which is hard to predict. What the Chinese are wrestling with is that between 2006, maybe 2006 to about 2000, and particularly between 2006 to the GFC period, 2008, they overpaid for a number of assets, particularly iron ore assets in Australia and copper assets in South America. We know of, for example, I just got an email from someone yesterday talking about the Rio Blanco asset in Peru, which is mired in a whole bunch of local difficulties. The Chinese tended to overpay and possibly also make some questionable decisions. The same has been the case with iron ore projects in Australia. There's a famous project in West Australia where the capex on that has reached $10 billion and still counting. So that there's been a huge amount of misspend of capital in M&A deals by the Chinese, and the new regime, I understand it, has basically said to the SOEs that they need to get some of their houses in order and get some of these projects up and running. So to that extent, their balance sheet is slightly constrained. But opportunistically, if the right project comes along, they're absolutely there, and that was clearly demonstrated by the Chinese acquisition of the Las Bambas asset. Clearly, if any of the blue chip, large gold or copper companies, or indeed companies across commodities, which are large and blue chip, are looking to sell assets, I believe the Chinese will be in there. And it's interesting because if you run the IRR on the Las Bambas project, once you've factored in the acquisition costs and then the further capex, the IRR on the project is not great. It's about 15-16%. But I think what really got the Chinese interested is that it was owned by Glencore, and therefore it's a top tier one asset. It's managed properly, and there would be a large element of truth in that. But if you understand what I'm trying to say, is it's the same asset, a different asset for the same IRR being sold by junior mining company, the Chinese are probably not interested. But because this was Glencore, they were interested. And I think, as the Barricks and Kinross of the world start to divest some of their assets, you will see the Chinese opportunistically nibbling at it. Now, but as I said, they still also need to get their the acquisitions they've made, get the house in order. Now, in terms of private capital, there is private capital, but in a lot of cases, in our experience, it's not clear whether it is genuinely private capital or is it a front for state-owned enterprise. And we've had first-hand experience of this. Where,
is there any way to tell the difference that it's a front or as opposed to genuine private equity?
Well, the private capital claims it's private, but then, as events transpire, it doesn't appear to be so private. There are a handful of professional, genuine private equity outfits, but they are only a few. If in the universe of private equity funds in China purporting to be interested in resources, I think the genuine ones are a small percentage. The others appear to be different arms of some other organization.
And you said that the government's taken more of a stranglehold. So does that mean that the process has changed a little bit? Where, for example, how the private equity groups would be the first step in to evaluate, to de-risk these projects, and then the state-owned equity enterprises would come in. Has that behavior changed? Maybe the SOEs start to get involved now more in the beginning?
I think what you state is whilst it has happened, I think with large projects, the SOEs will step in themselves directly, and again, that's been seen in the case of Las Bambas. I think so. The process where they've taken a stranglehold is, or not stranglehold is not the right word. I think what they've done is they simply said that if they're going to make a large acquisition, it has to be far more compelling. They need to demonstrate the economic value of what they're doing, because clearly the economic value of past and even recent acquisitions is not there to see, or indeed it's not there. So really, if an SOE is going to apply to the government, then there's a process. You've got to apply to the NDRC, which is the National Development Reform Commission. You then have to apply to the Ministry of Commerce, and then you have to apply. You've got to go through the State Administration of Foreign Exchange approval process. So there are 3 or 4 levels that you've got to go through. But the first level is going to NDRC, and that's what you commonly hear from companies in Canada. That the SOE interested in us, they have got NDRC approval, or they're seeking NDRC approval. To get it through now NDRC. You have to demonstrate a clear rationale, economic and strategic. And the first question that may be thrown back to some of these iron ore companies, or at least copper companies, is, well, you made that $800 million acquisition a few years ago. What is the stage of that project? Where is that going? So this is where more questions are being asked by government bodies on the rationale of acquisitions being made.
And when I interviewed Jayant last, we talked about and we touched on this topic of Chinese equity groups and what they were specifically looking for. And at that time, they were looking for large size, high grade and base metals. And I guess I'll ask Jayant first. And has that changed since we spoke? I know it's only been a few months, but what's your feedback on that?
Well, clearly Bhagyesh has a lot more experience in this thing than I have had. But Sunny, as you can see in Vancouver, now you have about 3 or 4, maybe 5 groups, companies operating as front companies for Chinese companies looking for projects in Canada. So they are looking for, typically they ask for some bigger projects, but they are not necessarily looking for 5 or 6 million ounce deposits. They are looking for a minimum of 1 million ounce deposit. And as Bhagyesh mentioned, they are now looking for quality assets. They have burnt their fingers in Australia and in South America, so they are more careful about their money. They are doing a more thorough valuation of companies before they try to buy those projects. So, but yeah, I think they still have a lot of money and they're still looking for projects. It's medium-sized to big-sized projects. But from what I have heard, they don't necessarily like investing in the U.S. Maybe Bhagyesh has a different experience, but the people I have talked with, they typically like to look for projects in Canada or in South America, but they excludes the U.S.
Yeah, and that's because they've been knocked back. I think Jayant is right. They've been knocked back 2 or 3 times on sensitive investments, not just in resources, but in other sectors as well. So there is a bit of a fear that if they, go through the time, effort, and expense of evaluating an asset, when it comes to receiving approval from the regulators, they will get knocked back. By definition, they're always going to look for large deals anyway. So it might end up being a costly tire-kicking exercise for them. So they tend to stay away from the U.S. and South America, Canada, Australia are favored jurisdictions. Africa is obviously of strong interest, but there has been an increasing focus over the last 2 years to focus on Canada and Australia. They are not fazed by the resource tax in Australia because, in their view, it's a very politically stable country. Canada is becoming a favorite of theirs as well. Interestingly, they are quite interested now in countries such as Brazil. They have not really been in Brazil, even though Brazil is such a large producer of iron ore and has got a number of gold projects. They have been focused on, obviously, Peru, and have got a couple of investments in places like Chile, etc., but not really in Brazil. And Chinese banks are opening up offices in Brazil, and resource companies are starting to look at Brazil.
A testament to China's appetite is just a recent bid. I think it was about a week ago by a state-owned Chinese investment group called Guangdong Rising, making a bid for Panhouse for $1.4 billion. So you're seeing some definite interest in these politically stable countries. So Bhagyesh, what are they looking for specifically? Are they looking for, base metal projects that are relatively advanced with high grade, large tonnage, or are they looking also for precious metal deposits such as gold or silver? I mean, what are they looking for at this time?
Of course, the key strategic commodities are of main interest. Base metals. If you look at what is happening in Indonesia right now, with the ban on export of the ore, particularly, that's affected them, particularly on the nickel side, as well as on the alumina side, the bauxite. So these are commodities of interest. Copper is always of interest. They will continue to... coal has slid down the scale. They were very active in terms of acquiring or looking at thermal coal and met coal projects that have slid down the scale. Uranium is of interest, but the problem with uranium, not the problem, but the issue with uranium from a Chinese perspective is that you only really have 3 companies that are authorized to import uranium into China. So the universe of potential acquirers is small. And in terms of gold, yes. I have done a presentation on how, in my view, a good way for the Chinese to diversify out of their dollar holdings is to buy directly into gold assets. And so that is demonstrated by Zijin Mining and, through their subsidiary in Australia bidding for Bulabulling, which is roughly a 4 million ounce gold project. So, and that's a low grade, large tonnage project. But in Australia, if that same project was in Africa or South America, it would be of no interest. But, the project in Australia, which is a politically stable country, is of interest. Yes, so these are the commodities. So it's the usual suspect of commodities. Of course, if they could find a high-grade, large-volume project, that would be perfect, but such projects are very few and far between. But they are definitely becoming more quality conscious. They're being forced to do so.
Okay. And do you see these transactions escalating in 2014, or do you think it's going to be much of a slower process, just as just for the reasons that you mentioned prior?
Yeah, it's definitely going to be a slow process. We are in meetings with all the SOEs where for the first time we're hearing that we've got to be more careful. Not sure if they're going to have the budget. They seem to be in a wait and see mode and bottom fishing. Try and get it for the lowest price. So I don't expect it. I don't expect a flurry of deals. But every now and then there will be a deal. Which is, the last Donbass deal, it took a long time. Just reading the press articles, it seems that negotiations on the price went on for a few months.
So, Bhagyesh, I have a question for you. Chinese companies bought projects in Ecuador and they bought a lot of projects in Africa. It seems to me that they are less interested in these countries. You have an opinion why this happened? Is this because they thought they could operate easily in these countries and then they finally figured out that these countries were not all that easy?
Absolutely the case. That's exactly what we're hearing. But I think it was a combination of two things. It was one is that the countries were more difficult to operate in than they earlier envisaged. But also it was the Chinese philosophy, Jayant, because they thought they would go in and simply replace the local labor and transport 1,000 Chinese workers onto the site. Now, that is exact, in South America, you're as familiar or more familiar with it than I am. It's got nothing to do with the federal government and everything to do with the local community. So they are the ones who call the shots. And, whatever and there was a complete lack of sensitivity to what the local community was requiring, which is why they have not been able to move forward the Rio Blanco project. That is mired in local issues. That's the case with some of their other investments in South America and indeed some of their African investments. Mm-hmm. It's a combination of two things that they have not been able to, blend in with the local culture in those countries. They've realized it, and therefore they believe that, the price that they pay to get into these countries is perhaps too high, and they prefer to go in. There is a strong focus on investing in Canada and Australia.
Very interesting. So let's try to, put this in and tie this all into the demand for base metals, but also precious metals, and that specifically being gold. I mean, Jayant, now we know that these private equity groups and the SOEs are looking for these industrial metals, really, and as well as gold. Recently China actually just opened up its doors where gold will now be shipped directly to Beijing as well. So, us being the only way to really look at the numbers for gold imports into China were via Hong Kong, but now it looks like they're creating more ports of which they can just ship directly to China. What does this mean for gold?
If you go to jewelry stores in Hong Kong or China, I have probably never seen a store which is not packed. Now, I don't have the numbers on how much Chinese are actually buying, how much gold Chinese are buying, but I see a lot of volume being traded in these jewelry stores. I also think that a lot of people who are afraid of their government, the Chinese government, which is now trying to be more careful about what the bureaucrats are doing with their cash and what the businessmen are doing with their cash. And I think a lot of Chinese are paying attention about securing their wealth. Now, that might be illegally and improperly earned wealth, but there is certainly a tendency to secure their wealth by either moving it outside China or by converting it into gold and property.
Well, I guess we'll get some last final words once you're at the Precious Metals Summit, which is on the May 29th and 30th in Hong Kong, and you're one of the main sponsors of that event. Can you tell us a little bit about that summit?
Sure. It's the Hong Kong leg of the summit that's held in Beaver Creek, Colorado every September, and these days in Zurich in November. So I believe Jayant's very familiar with the conference. held typically the week before the Denver Gold Show. And it focuses on the smaller cap precious metal stocks, those that are likely to be the stars of tomorrow. So this year, we've managed to get about 31 odd companies come for the conference, and these are companies listed, mainly on the TSX and the ASX. And hopefully we'll get a good investor turnout as well. The response has been very positive. And it's a 2-day conference. It's different to the Mines and Money in that the companies don't have a booth as such to where they display their story, but they get a speaking slot, and then there are one-on-one meetings. So it's all about investors and companies doing one-on-one meetings. It's by invitation only for both companies as well as for investors. And, it's really only for investors and no service providers. So again, it differs from the usual conferences because you have to be a qualified investor to be able to register for the conference.
And I can assume that there will be several Chinese-based groups as well that will be attending the conference.
Well, we certainly invited them, and I know that the likes of Shandong Gold and Zijin should be there. We've also invited China Gold and a few other mainland private equity funds.
That's excellent. Well, thank you so much, both of you, for being on the call today. Bhagyesh, thank you so much for your insight into China and the way SOEs operate. And Jayant Bhandari as well, thank you so much for your feedback on Singapore and it being a trading hub as well as the Chinese investment for gold. If you do require some information from either of these gentlemen, I will be posting the contact information on our channel, and you can reach out to them and find out more even about the Precious Metal Summit or contact Jayant Bhandari at his website directly. Thank you both for being here.
Thank you very much, Sunny.
Thank you, Sunny, and thanks, Jayant, as well. Appreciate it.